So in today's video, I'm going to be talking about a very powerful day trading strategy. This is not new. I'm sure a lot of people have heard of it before. It's called the dip and rip. But the reason why I'm highlighting it today is because this is a main goal of mine moving forward. I really want to work on getting better entries on pullbacks to support or pops to resistance when it makes sense. It's not just because a stock is gapping up or a stock is gapping down. It's because maybe it's caught a catalyst of some sort. There's a trend change, maybe a breakout of consolidation to the upside, the downside, or it's making a new all-time high or a new all-time low. Or because maybe the prior day it had a really big move in one direction and I'm looking for a little bit more continuation. Some of the key points with this strategy is that it's trying to get really aggressive entries for much better risk reward. It can be long and short, and it can be done with options and stock. And at least for myself, this isn't going to be any sort of big change when it comes to my style. I am still a very short-term trader. I like scalping. So really what it would be is probably getting that really aggressive entry and then holding for like a pre-market high break, a pre-market low break, or a new high of day or a new low of day. But just making sure that that entry is really good. So by the time it gets to those levels, I've already been in the trade and got a very nice move. Because a lot of times I'll wait till that new high or the pre-market high break, and then I'll wait for the new low or that pre-market low break. And even though those moves can be nice, sometimes when I get those entries right around those levels, they can have them move through it and then they pull right back and I can get out flat, which is fine. I'm a scalper. I want to make sure that I protect the downside. But getting those really aggressive entries, by the time it gets to those levels, I've already been in it. And then as it starts to move pretty fast in my favor, that's where I would take profits. And because of the aggressive entry, by the time it gets there, I'm now very in the money, which will lead to a much better outcome on the trade. So now let's go over some examples. I'm going to show two examples to the long side. It's going to be on Tesla and MU, and then one to the downside, which is going to be on mRNA. So now let's get into the first example, which is going to be on Tesla from December 22nd. So starting with the daily chart first. It's been in a downtrend, but if you look, I took all the moving averages off, no indicators, so it's very clear to see. It was in this descending wedge. And then on the 22nd, it had a big gap up because there was news that Elon was possibly done selling all of his 10%. Regardless of how the stock should react, just knowing that there was a catalyst and also it broke out of this descending wedge on the daily. So maybe there is a possible trend change. It's been really beat up on the daily chart. It filled the downside gap at 910, found some support right around 900. And Tesla is one of the most loved stocks in the market. So when it gapped up out of this descending wedge, maybe buyers say, hey, this is an opportunity for me to start getting involved because I think that this is an okay spot to start buying, whether it be momentum trading or long-term investing. So it could possibly kickstart a momentum move to the upside. Nothing is ever 100%, but just recognizing that when a stock like Tesla is beat up and then it starts to get those gap ups, that it has a chance to really get going to the upside, especially because a lot of people are watching it. So now that we have that possible trend change idea from the daily chart, now let's look at the pre-market. It had a very big gap up, nice trend in the pre-market. So just looking at some support levels, 965 an area of support, 960, and then also kind of this 958. Don't have to be exactly perfect, but just realizing that there is a lot of support below. So this is how I think about the setup. I want that first move off the open to be down. I do not want it to spike straight up. I want it to pull back. And if it pulls back to those areas and then it starts to find some support, I think that that would be a really good buying opportunity. So now let's see what happened off the open. So very quickly, Tesla pulled back into those support areas. And this is how I'm going to try to trade it. So realizing that it came into 960, 958, and then it starts to bounce, what I would do is when it starts to bounce and I feel like it caught some support, I want to go long, very aggressive entry, good risk reward. And then if it makes a new low really quickly, I'm just going to get out of the way so the loss is not really big. So when it pulls back really quickly off the open, find some support, I start to see 958, 959. That's an area where I'm going to want to go long. And then when it makes a new low a day, I just want to get out of the trade. New low a day was 957, so only risking a couple points on this trade. And then obviously I got to use some trial and error. So I have to take the trades and then I got to figure out kind of how I want to execute it really well. But I'm thinking the goal is probably to wait for like a pre-market high break. So getting a really good entry near the lows, and then let's see what happens after. So very quickly gets bought back up, takes out the high a day, has a strong buying candle showing that buyers are stepping up. And then once it clears that pre-market high, that would probably be a spot where I'd want to take profits. And then if for some reason I decide to be really patient, I would take majority of my position off pre-market high break and then maybe leave like one contract as a runner for break even, because sometimes when you can get those very aggressive entries, that can be the low of day or the high of day. for the entire session, and then you leave a contract on, and those moves after can be huge. Now, I am not very patient, so I wouldn't be holding all day, but just realizing that those entries can be really good spots, and sometimes it's worth holding a piece for a much bigger move. If you've been watching my videos up to this point, you know that I am not patient at all. This is a big goal of mine moving forward, to be able to leave a small piece when it makes sense, when I get a good entry, so that way I can have a really good outcome on the trade. And the MU example, so a couple days ago, broke out of some consolidation. It's also not too far away from all-time highs. All-time high is 97.50. Not knowing if it's going to get there today, but just realizing it's a very strong stock on the daily chart. Had an inside day the prior day, and this is a very quick flag pattern. So just thinking that if it can take out the high of this prior candle, 91.14, maybe it has a chance to catch momentum. And it had a slight gap up the next day, so now let's find some support levels. This prior day high, also some action around it in the after hours and the pre-market, and then this 90.20 came to it a few times the day before, and then tested it a couple times in the after hours and the pre-market. So that looks like some good areas of support to the downside. So if MU can have a quick pullback to those support areas and then it holds that support, knowing that prior day high is above, pre-market high is also above as well, and it's not too far away from all-time highs, it's a very strong stock on the daily chart. So if it can bounce on support and then quickly get bought up and then take out prior day high and pre-market high, then that's a really good risk reward entry, and who knows how far it can go. So now let's take a look at what happened off the open. This is a 1 minute chart because it happened really quick. Quickly pulled back to support, held that 940, starts to get bought off of it. If I was good, being able to get long 90.50, 90.60. So really only risking about 20 or 30 cents max. It's a very good entry. Takes out the high a day and then clears that prior day high and pre-market high. This is where I would just get rid of most of my position. But if I'm working on being more patient, probably leave one contract or two contracts. And then it even does form a flag pattern at around 91.50, and then look at the momentum this has after the fact. And you never know how far something is going to go, so this is where I would have to use trial and error, kind of figure out exactly how to play this. And for that last runner, maybe using the 9 EMA as a stop. When it closes below it, I would just get out of it. And the last example is going to be on mRNA to the downside. So what happened the prior day? I know mRNA had some good news, and that news got sold. So really nasty candle the prior day. Possible trend change, looking for a little bit more continuation to the downside, just because that selling the prior day was very aggressive. So now let's find some resistance levels in the pre-market, not trying to overthink it, just keeping it very simple. Look at this 278, kind of touched it the prior day, also a handful of times in the pre-market, 280 prior day as well as the pre-market, and then this 282. And then off the open, if mRNA has some sort of spike towards those levels and then it fails, I think that that would be a really aggressive entry, and then look for more continuation to the downside. And then mRNA has a pretty aggressive spike off the open, gets through 278, comes into 280, rejects that level, and then once it starts to show some weakness, this would be the area where I would want to go short, and then I would risk off the high of day, so only a couple points. And then this is a really aggressive selling candle on the 2 minute, and then once it makes a new low of day, that would be the area where I'd want to take out a lot of my position, and then if I can work on being patient, leave a runner, and then look at this follow through. Huge move lower. And then maybe once this starts to change trend, and then it has a candle that closes over the 9 EMA, that would be where I take the last piece off. So those are some good examples, and it's still utilizing all the levels that I like to trade around. Prior day high, prior day low, pre-market high, and pre-market low. But instead of going long right at the level or short right at the level, it's trying to get a very aggressive entry and then letting it play out and then continue to those levels. But by the time it gets there, I'm already nicely in the money and I can add a lot more P&L to my trading. So this is a big goal of mine moving forward. Focus on getting aggressive entries when it makes sense, when the stock has a catalyst, when it's making a new all-time high, when it breaks out of consolidation, or it's had a very aggressive move in one direction the prior day, and then I'm looking for more continuation. I have not perfected this strategy at all, but this is where I'm going to use trial and error and actually taking trades to figure it out. So that was the video on a powerful day trading strategy, the dip and rip, some really good examples, and how I'm going to start implementing this into my trading. Hopefully you got some value. Thanks for watching the video. Feel free to like and subscribe, and I'll see you in the next one. Thanks for sticking around to the end of the video. I just wanted to highlight a couple cool things I have to offer. The first is going to be my newsletter watch list. This is going to be what I post on my private Twitter 30 minutes before market open every day. And what I'm doing is I'm doing a very quick highlight of the SPY, the Qs, the bigger picture, the upside level that I'm looking at, the downside level that I'm looking at, the market news or the catalyst that day. And then I'm going to list 4 to 6 names that I'm watching, my favorites that day, and then the catalyst behind them, if there's any news, the bigger picture idea, what's going on the daily chart, and then the levels to the upside and the downside. And then I add some mental notes at the bottom, kind of what I'm thinking that day, make sure to keep my expectations in check and follow my process. And the second thing is going to be a one-on-one call. So if you want something that's less of a commitment and you just want to talk to me about my process and how I approach the market, this is going to be great. It's a one-on-one live call for 1 hour. So if you're interested in any one of these 2 things, there will be links in the description below. Feel free to check them out.